Get cracked. Wake up, motherfucker.
Hey guys, so I watched the film The Big Short over the weekend. It's been 9 years, I think, since I last saw it. And wow, what a fabulous movie. But something struck me about how much the central characters resembled, well, me. Now, this is not about me, I promise you. But I did cross paths with some of these guys, and I certainly lived through that drama. It's more about how the film depicts these kooks, these cranks, these nutters, these really weird people, not your average hedge funds. Because there are moments when the psychonauts, as I like to call us, when we see a glimmer of the future. These are revelations, mostly shocking. We see bad things, we see dead people. Of course, we're early, we're ridiculed, we're scrutinized, we're mocked for the minority view. Because fast, powerful price trends, they make ordinary souls rich. Their hot hands convince them that they're geniuses, but they're not. And you know what? Today it feels something similar. Stocks in the concentration around the Mag 7, those massive tech giants. They're like the housing bubble in 2006. People scoffed. Remember that scene? Where was it? Vegas, the Vegas convention of mortgage brokers. Who would short housing? Today, who would not be long Nvidia? Right now, the world it's short treasuries and it's long everything else. Let's face it, you can't pump the value of 7 stocks to 50% of American GDP without a lot of energy and money. Think of it like Elon sending a ton of weight to Mars. He needs $1 billion per ton and 1 million tons to build a city on Mars. That's a cool quadrillion dollars. On a similar basis, you need a hell of a lot of thrust and a hell of a lot of money to keep these markets supersonic. I keep saying that peculiarities from the plumbing of the $13 trillion US mortgage market turned the huge banks into sellers of treasuries. But that's a topic for another time. What I really want to point out is that everyone else joined this trade. It's essentially the synthetic CDO phenomena from another era that proved so devastating back in 2007. Japanese banks, US banks, hedge funds, pension funds, your money, retail, they're effectively been selling treasuries short. This is the energy, the propulsion, the force equals mass times acceleration. This is the energy that enabled the mass, the boosterism of US stocks to 2 times GDP. But that mass needs more and more energy to be sustained. Without it, acceleration, the price gains, they start to falter. There are evident signs of price deceleration today. Have the thrusters stalled since late summer? Remember, US house prices peaked back in late 2005, but the force of the belief system kept investors running over the cliff like crazy wild old coyote in those old cartoons. The travails, the sell-off in the yen, that swoon in the Nikkei, the sudden outperformance of boring old utilities and staple stocks. These are indicative of just how enormous these synthetic bets are and how they're coming under pressure. Japanese banks shorted treasuries and they funded every global bull market. They pledged their yen deposits as collateral. But today I can feel a margin call on the horizon. It's subtle, but it's evident to the attentive. Banking counterparties worldwide are becoming more reluctant to supply dollars to feed this trade structure. Why do I know this? It's easy, because the dollar is now rising. And sure, US stocks are back at their all-time highs. But people, I am not here to suggest that you short stocks. Remember, hedge fund managers are rarely heroes depicted in movies. They're calculated gamblers. But what I'm saying is, it's time for sober reflection, to reduce risk, to depart the stadium before the stampede begins. People, this is asset capitalism. The relative strength of all the hot sectors is waning. Yes, the banks are reporting blowout earnings. Of course they are. Remember, they did this back in 2006, first half 2007. But with so much mass, so much capitalization, the trading of these stocks is a bonanza. Until it's not. Remember Wells Fargo, big US bank, made an all-time high right before Lehman's went bust. And today it trades only 30% higher than those levels from 16 years ago. Asset capitalism, people, is derived from kookiness, but it comes with a warning to save your soul before it's too late. Stay informed, people. Stay ahead. Keep taking some asset capitalism.
Alrighty. What's up? 1 minute until the market closes. That was Hugh Henry. He was a hedge fund manager of Eclectica, I believe, back in the 2008 days. And he made his money off of that bet. He hasn't made any, real bets after that. I think he's done. And so far, well, he just surfs. He has properties in St. Bart's. He rents them out and he chills, making videos like that for you to watch. Who do the markets say will win? The markets don't know who's going to win. I mean, you can look at the betting markets, but that's not going to tell you anything. You can look at Donald Trump stock, Truth Social, DJT. That's been going up and down based on whatever the polls are. So that's not going to tell you who's going to win. Who's going to win will be determined pretty quickly, or it'll take quite a while. I believe one of the videos I'll play in a while, it shows that they expect their models. So all the hedge funds will have models. And based on who's winning by, I guess, midnight Asian time, so Hong Kong time around there, midnight Hong Kong time. Let's see. Hong Kong time. Let's see what Kong time to PST. Let's see. Yeah, it's 5 a.m. their time right now for here. So by the time it hits midnight, it should be in the morning in the Pacific. Okay. All right. So 7 a.m. my time, 10 a.m. 10. I mean, wait a minute. Is that right? No way. Is it? I guess it is during the day, huh? Noon time should be around 9ish. My time 7 to 9. Yeah, that's right. Then. So yeah, it'll take until 10 a.m. Tomorrow. That's the latest. So whatever models they have, they should figure out by tonight pretty quickly. So if it takes a long time to count up votes in the battleground state, yeah, it'll take up until my time 7 o'clock, 10 o'clock Eastern then. Yeah. So by the time markets opens, they should know who exactly won and they'll adjust everything properly. But right now, I just want to talk about one stock that I've been talking about forever. You know what it is. I've been talking about so much. It's Palantir. Great earnings. Today. 23%. Oh, beautiful. HB bought it here when the whole market was crashing just before earnings on a Monday at right at the bottom, basically at open, near the opening, right? It was like $21, I suppose he got it at. And I told him like, hey, you got a good gain right now before earnings. Like, it's about 100%. Like, shouldn't you take some profits? He's like, nah. Well, all right. So yeah, he got some more. He got some more gains today. So I don't know if he sold it up here or not, or maybe he's just gonna keep it. But that's a very important level because it finally cracked the level that was made during the IPO hype days. So this was during the IPO hype days. And then when we got into the COVID blow off into February, right? It was essentially February was the blow off. So it hit its peak right around here. Yeah, just before February. So it made its peak just before February. And then made a secondary peak right in the February where everything else went down. So I can show you, like, look at ARC, like the ETF that Kathy Wood is doing, managing. So you can see, yes, if it just fell with the rest of and you know how stupid Kathy Wood is? Like, she basically started dumping her Palantir shares at the bottom. So I mean, look, these people are paid a lot of money to do stupid stuff, and even if they make mistakes, well, whatever. You know, it was just a bad year, right? It was just a bad year. If I did crap like that, you think I'd probably be fired and never and my resume would be tossed in the dirt, right? And I would get no references. Who the heck would hire you, right? If I was just a lowly person in finance. But you run an ETF or you say all these highfalutin things on CNBC and you do dumb stuff like that. I just can't believe you, you know? Like, why would you start selling Palantir here when I was buying? Like, are you dumb? So for me, I would sell, right? That's me. I would sell because if you bought around here or even here, you got long-term gains. So you wouldn't care too much about taxes. Yeah, I don't understand how you wouldn't take some profit or you would just at least take some insurance. But hey, if you bought later, so I think I recommended around, was it July? So that was the last dip into August. Yeah, so that's probably the only dip you would get when I started recommending this sucker. It was beautiful, beautiful stock. So yeah. Anyway, let's get to the election stuff. Oh yeah, and SMCI is a gamble I'm doing. I've been saying it's a gamble. It has accounting problems, and anytime there's accounting problems, nobody would touch it. Like anything you're doing, it has earnings right now after the close, so there should be something happening. I don't know what they're gonna say. This either goes up 50% or crashes 50%. That's what I heard one of those analysts say on CNBC. They're like, ah, yeah, this is either a plus 50% or goes down 50%. Yeah, so if this thing goes down 50%, well, okay, yeah, it makes sense. It will drop back around here near this area where it last made kind of a range. Yeah, but I have no idea because I told people that 25 area I would buy. So I started buying when it hit 68. I mean 28, my bad. 28. And on Monday it cut below it, so I bought at the open or near the open. I didn't buy exactly. I just wanted to wait and see how it did. So I think I got around 24 and a half. So I got some there, but it's all gambling. I wouldn't have just went on stream and just told people buy, 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 buy because dude, I'm not gonna tell people to do gambling ass shit moves like that. Because if you're a real trader, you wouldn't and you wanted a big position in this thing, you wouldn't do it. Like, let's say you bought on Monday, you would have got out already today because that's a pretty nice move from 24 to 27 ish. But if you want just in case you want the big move, like it could actually retrace and go all the way back up to 50 if you're lucky. Maybe after earnings it pops back to 34. I'll sell some and then I'll leave the rest for after the election at the Powell, see if it can get back to 50 by the New Year's. For sure, do that. But yeah, I think honestly, this damage is so bad that it would have to really redo everything it did. So let me just get rid of this. Like it just has to move back and forth in this range. Like if it actually stays in this range, like if we're not lucky, then it's got to do everything again. Everything again. I mean, if it does crash through here, I would say this company's toast. It's really a bad side, and it's not a good look for the S&P, because it was added to the S&P 500 around here. Was it like maybe February or something? Yeah, it got added to the S&P 500 when it was pretty pricey. So all the ETFs that just ate it all up is just terrible. And I'm gonna look through a lot of semiconductor stocks today. So here today, no lessons. I'm just gonna play some videos, go through a bunch of charts, a lot of them, so you can see what I'm thinking about for the rest of the week as we get through into Powell. So you'll see what tickers I'm looking at. Alrighty. So let's look at another video. Let's do an election type video here.
About how we're seeing evidence in markets of changing expectations around whether we get a Trump presidency and also whether we get some kind of red sweep in Washington. Do you see those trades evidenced in the market? I mean, the dollar seems like the obvious one.
Yeah, very much so. That's the dynamic here, though. I think it reflects a lot more about kind of position pairing because of the uncertainty, rather than a real change of expectations. Talking to endless traders over this weekend, I've tried. I was away on holiday last week. I've come back and tried to poll as many people as possible what their kind of expectation is. Most people are positioned for a Trump victory, but very tentatively positioned for it. So there tends to be a bias in the market, and we've seen that as positioning in the last few weeks, that Trump is likely to win. But people acknowledge that polls seem to be second-guessing themselves. There's much more questioning of whether they've potentially overcompensated or undercompensated for problems in getting the correct polling sample in the last two elections. And because of that, people do not have high risk exposure and do not want high risk exposure going to the election. So I think the dynamic that we've seen over the last couple of sessions is more about just paring back a bit of risk rather than suddenly swiveling to think that Harris has a much greater chance.
When do we start to see the big direction? What will it take? How high is the bar? When are these investors going to be looking to deploy money into the market? I'm really curious about how they see this week evolving.
I think that for all the hedge fund guys, they're going to be acting about lunchtime Wednesday. By about 9:30 p.m. Eastern Time, 10:30 a.m. Hong Kong, Singapore time, we'll get enough input from key swing states to know whether the polling adjustments have undercorrected, overcorrected, or whether they're in line. And that means the people with the most accurate models by around that time on Wednesday should have, that's 9:30 p.m. Eastern Time Tuesday, 10:30 a.m. Wednesday in Hong Kong, will know roughly whether their models are correct or they can adjust them and have a good confidence in the result. And there's an expectation from many people in the market that unless it is truly very close, that we'll know which way the result's going to be by lunchtime Wednesday in Asia. That does not mean the official result gets announced then. Remember, 4 years ago, we all knew what was going to happen again by about Wednesday afternoon in Asia, but the official result didn't come through for a few days later. So I think from that moment onwards, we'll start seeing traders react. I think that the conviction is around Trump trades, and that's because Trump is a change of the status quo, much more so than Kamala Harris, who is obviously vice president of the current administration. So that's where the much more aggressive action will happen, that if Trump wins, people really, really want to buy the dollar. That is seen as the cleanest trade apart from crypto. I think dollar yen, dollar MEX, dollar CNH will react really, really aggressively on Wednesday if Trump looks like he's winning, which we should know either way by Wednesday lunchtime.
Okay, so he started talking about dollar MEX. This is really important. Okay, guys, so I'm gonna show you the Mexican ETF. Too many W's. EWW. So it's been floundering since they had that new Mexican president elected, Shine Bomb doesn't sound very Mexican to me, but okay, whatever. Shine Bomb. And so it's been ranging around this blue area primarily. So you see, every time it tries to pop and recover, now it fails, pop, it fails, pop, fails. Now we are entering the Trump. If Trump wins, I don't know. I'm assuming this will just collapse, right? It'll just like fall right through here. That'll be a great time to buy Mexican stocks, I would think. If you're trading without options, you could look at the MEXX 3X Bull Mexican shares. So let's see. I'll do the weekly chart here. Say it drops to 40. Let's see. So I'll just do this. Okay, from this line to this line. So about 9%, huh? 9%, let's say 9%. So MEX should be down at least 30% if it drops really clean, if it drops in one swoop. So that's about $8.27. Okay. So look for $8. Look for $8 in MEXX. If it gets to $8, I might start thinking about it. Really start thinking about it. Yeah, Mexico. Because Trump is more focused on China than Mexico. But for a knee-jerk reaction, yeah, you never know. Maybe the peso will have a collapse and it'll start making shares of Mexican stocks listed in the NYSE temporarily dip. That'll be a good sign. Good sign. So let's see. Let's see what happens. Same thing with bonds. So if Trump wins and there's more of a less of a sweep in Congress where there's at least a slight majority, there's no way to get a super majority, but at least you get like a slight majority in both houses, right? Then, yeah, expect a bond to have one more knee-jerk reaction before recovering later on Powell. That's what I'm guessing. So watch for that. So TLT or TMF. The beauty of having TMF is 3x, 3 times movement of TLT. So I've been buying since it dropped below 50. So I got some positions, but if it does drop tomorrow, I'll definitely start buying more. The beauty about TMF, it also gives you a dividend. So you get a coupon for having bonds, right? But this ETF is based on bonds. TLT will give you that dividend every month. TMF will give it every quarter. So either way, like let's say you assume that bonds will recover into next year, you can at least get paid to hold it. So you'll get paid just before New Year's for having TMF. TLT, you'll get paid every month. So the next time will be after Thanksgiving, right? Before December and then New Year's. So you'll get your payments at least twice there. But TMF, you got to wait for your payment for the whole quarter. So that's the difference between TMF and TLT, right? TLT, it just follows it straight 1 times. So here, let's say you get lucky, it goes all the way back up here into New Year's. That's 7.7%. You got TMF. Let's see, 28%, right? About 28%. If it's a straight line, it'll be 28%. If it's not, it'll just be less than like 25. So around 62, let's just say 62-ish, okay, for TMF. So that's what you will get for that one. So there you go. There you go. Now let's play the next one. The next video here. Okay, let me get that wrong. Don't need that.
Find out how the street is positioning for the election today. Our next guest says beware of some of the initial market reactions and lays out some trading scenarios if either Trump or Harris win. He says currency and gold might see some high-level moves with a Trump victory. With the Harris win, maybe clean energy returns could be higher. Scott Kroner, Citi U.S. equity strategist, joins us this morning here at Post 9. Happy Election Day, Scott. Good to have you.
Great to be here.
Your note's great. You've got like 20 traits in this note today. What are the ones that you are thinking about the most?
I'd say what I'm watching most closely, to be quite honest, are some of the basics, right? We're watching how energy's trading. We're watching how the banks are trading. And I think the small cap versus large cap trade is another, telling trade that we need to keep an eye on here. And, all of them kind of, if you look at the 20 in total, they're all giving you mixed reads on the setup going into this, which is what's made the past month's trading so interesting. We're arguing that you've seen it less in equities in terms of potential election outcomes, but where you've seen this Trump trade unfold has been more in rates, in currency, and potentially in gold.
Is the consensus that you sell a Donald Trump rip and you buy a Harris dip?
That's our view. Okay, now the spin here is pretty straightforward when you think about it. In our view, the S&P 500 is fairly valued around current levels. You're 24 times trailing, 22 times forward. And what we're getting at here is that we understand that there's the animal spirits that come with Trump, more pro-business, got that. But your starting point is a fairly extended valuation circumstance that's predicated on very strong earnings growth follow through into 2025. Our concern is that with that setup, you go into a Trump win and you introduce tariffs into the discussion. Now, to the earlier point on supply chain constraints, we've got something similar to that unfolding. And so what ends up happening is that the 25 growth expectations, we think, become a bit more suspect as we navigate tariff actions.
So you're tying supply chain disruptions, or I guess linearity, to tariffs.
It's the same sort of impact, right? We have to start looking at every company in terms of its cost of goods sold or its path through, what they're going to be able to, eat themselves, a gross margin versus pass through, and all of it potentially plays into this. Trump and tariffs has a little bit more of an inflationary spin to it. I don't go down that path so strongly. I'm more of the view that what it does do is create some uncertainty around the earnings projections going into 2025.
I feel like there's more of a wild card on a Harris win. I mean, because the Trump trade has been what's been in the market. We've seen glimpses of it, right? Higher long-term yields, better stock prices, consumer discretionary gets hurt a little bit because of tariffs. But what about a Harris win? I'm not fully clear. Are you clear on what the economic policy would look like as it pertains to different sectors of the market at this point? Or do we have to wait for her appointments to signal whether she's going to be moderate or not?
It's Harris and sweep or split, right? So essentially, the way we first modeled it is that if it's Harris and sweep, then you'd probably have higher chance of tax rates, corporate tax rates moving higher. And that's a very clear path towards earnings degradation going into 2026. That was fairly straightforward.
Dem sweep, which is the least likely
Which
scenario.
is the least likely.
Yeah.
So you go Harris and split, and it becomes sort of right now versus that the Trump tariff setup, the least onerous. Okay. So if the presumption is that there is some Trump win priced into markets, and you get a Harris plus split, then yeah, our view, Carl, is that you'd see the market pull back. But from a fundamental perspective, that's less onerous, and so we're more inclined to want to buy into that.
So tax policy, though, a lot of it will depend on divided government. In other words, keep an eye on the House, for example, and whether it goes Republican to Democrat.
Correct. So essentially, what can you get done in a split Congress? Maybe you can nudge tax rates up a little bit, but probably not the 21 to 28%. That was sort of the platform position, in the broader, Harris, policy approach.
Right.
It's been argued that of the four scenarios, right, sweep either way, split either way, three of them are stock bullish. Would you agree?
Mostly, for the most part. But again, we just have to be sensitive to, again, our view on this is try to steer clear of a lot of the social issues that may, to Sarah's point, end up influencing the outcome. My role is much more fundamentally focused. And so when we look at the fundamental influences at work here, that's the way we're thinking about it. It really comes down to Trump and tariffs and Harris and taxes.
with tariffs being a more immediate function.
More immediate because you can get things done for 25 impact. You know, any tax changes are probably more likely associated with TCJA expiry at the end of next year, so they become a 26 influence.
Right.
I mean, our modeling going back to Harris and taking both, you know, sort of a blue sweep was that you could see 26 earnings expectations go from current consensus of plus 12% down to 5%. So it's that magnitude that you would have to begin to price in. Now, you have to kind of go back to how does this really work? Well, you price it in. Then once you got your new normal, then you're off and running on traditional fundamentals again. And that's where we are, I think, with both each of tariffs and with the tax issues.
That's why this week's going to be so.
Yes, gaming out various scenarios for investors, saying stocks exposed to a Republican win may not benefit to the same extent that they did in 2016, and that if Democrats win, many of these recent market moves could unwind. Joining us here at Post 9, Michael Zezas, Morgan Stanley, head of U.S. Public Policy Research. Welcome.
Yeah, thank you. Thanks for having me.
I'm sure you've been in very high demand lately from investors.
It's been busy enough.
There's this conventional wisdom, right, that if Trump wins, and especially if he gets a sweep, that's good for the markets. If she wins and it's a divided government, it's good for the markets, and a Democratic sweep is bad for the markets. Is that too simplistic? What are we missing?
I think so. I mean, I think a lot of conclusions about what happens at the index level are pretty simplistic, right? Because there's so many unknowns with like the post-election policy path, how it's sequenced, how severe it is, and I think you can really kind of see into that what you want. Where I think there's probably more signal is at the sector level, right? So what you've seen, I think, as prediction markets have kind of moved in favor of Trump over the last few weeks, you've seen some of the sectors that should do better in a Trump win scenario do better, and that makes sense, but it means that if Trump wins, there's probably not as much near-term performance there. Some of the stuff that has been a bit weaker, like consumer retail and brands, unperceived tariffs, that's the kind of thing that maybe does better on a Harris win, right? But that to me is kind of where the real signals are. I think if you're kind of leaning into a specific outcome for the index, there's a good chance you're going to be wrong.
What else would a Harris win mean for the market and the economy, especially in a divided government? The president has power over foreign policy, trade, immigration. So what does that look like?
So I think a Harris win in a lot of ways is defined by the things that wouldn't happen if Trump were to win, right? So you're not necessarily going to see a lot of new tariffs. You're probably not going to see substantial new immigration curbs beyond what's already happened. So those are two things that would have been kind of growth challenging that Harris wouldn't necessarily bring to bear. And Harris win scenarios probably come with kind of smaller deficit outcomes for 2026 because there's less tax extensions that they want to do. They'd also want to bring new revenue to the table. So that's a bit more of kind of a status quo. So I think where you could see more of that impact is actually in the fixed income markets, where there's been a bit of a kind of breather lately, but there had been this move to higher yields, steeper curves. Some of that could retrace in the Harris win scenario.
You mentioned, I guess it sounds like you're suggesting there is some asymmetry, right, where potential Trump policies are a little bit more out of the money than Harris policies. How is that affecting price action in general, do you think? Is the market chasing that because those outcomes could be more extreme?
Well, I think that's probably true. I think it's also probably that over the last few weeks when you saw prediction markets and you saw a lot of other measures kind of showing that perhaps Trump was going to do better, there's a lot of kind of pricing in of perceived trades of sectors that do better in a Republican win scenario. Some of that's kind of come off because we had a weekend of a kind of more mixed polling and some observations in the other direction. I think we're actually going into this event a little more balanced than we were on Friday because of that. We've got some good reminders in polls that basically polling errors can go in either direction. Either candidate could be undercounted here. So while I think we're going in with a little bit better balance, on net, there's probably a little more probability baked into the markets with the idea that Trump's going to win relative to Harris.
Fannie and Freddie, do you have anything to say on that? I don't know if you get any questions on it because it's been a very key sort of Trump trade. You know, obviously the idea that they would be taken out of conservatorship under a Trump administration. They didn't quite get to it the last time when Secretary Mnuchin was unable to sort of get there.
Well, listen, I think it's the sort of fair reading that the probability of policy changing around Fannie and Freddie goes up considerably if Trump were to win. And even so, or you probably need a sweep scenario to really kind of clear the path to that. It's a major legislative lift, a major regulatory lift. So in Harris win scenarios, not to say that it's impossible, but far less likely. And so I think that's probably the right read if that's the way the market's reading it.
How much money do the tariffs bring in if he goes with what he's plans? Do you know?
Well, listen, I think some of the estimates out there, like if you do 10% on all incoming imports
and 60 on China.
Yeah, I mean, $300 or $400 billion. But these are static numbers, right? So when you say, oh, we could collect $300 or $400 billion in tariffs, what you're not accounting for, and economists have been really good at pointing this out, is, well, what about when people change their behavior about consuming those? There's less of a base to actually tax, and so therefore those revenues could kind of come down. So it's potentially a pretty big pool of revenue that could come in. But also, we don't think that that kind of blanket tariff scenario is the most likely outcome. There's probably plenty of tariffs across a wide geography that could be instituted, but you probably need Congress to sign off on something like a blanket tariff. And so if you don't have that, you're going to be targeting China, you're going to be targeting Europe, potentially targeting Mexico, but not necessarily the whole world.
Okay. Michael, well, thank you very much for joining us.
Yeah.
Alrighty. So let's see. Show you. So again, we have our preliminary report for SMCI. Not looking too good right now. But I mean, I wasn't expecting anything else. But at least it's not down 50%. Now, if it holds around 27 tomorrow morning, I mean, that depends on the election too, right? So we're going to have to go through that. That's going to be something. So let's see. Yeah, right here. It's been flirting around down 8% to down 9%. It's a lot better than before. It's like a knee-jerk reaction below 24 at down negative 13%. So let's see what happens in the morning. If it tries to keep it up, tries to keep staying at 26, okay, I'll keep holding it. I'll keep playing. But yeah, this might not be the end. We'll see. Looking at Polymarket, let's see what the election is. You can bet on a lot of things on the Polymarket. So I don't believe you can do it as a U.S. citizen. Apparently, that's illegal. But Robinhood, looks like you can bet on these type of futures types things. SCFTC does not like you doing this. Yeah, this still 61% Donald Trump, 39% Kamala. Same, so nothing changed. What day will the AP call the election? Tuesday, no way, 60%. Wednesday, 46%. Let's hope for it. Otherwise, Thursday, 20%. Okay, that's about it. So let's look at hims and hers. This is, one of the most interesting stocks that I've been looking at. Hims and hers. Let's look. Tomorrow we'll have Novo Nordisk. So that's NVO. Okay. So they'll do all the other weight loss drugs. So right here, yeah, it opened. Yeah, it closed pretty much where it opened. It went it dipped right to that 40-day moving average area there. It tried to climb back up, it failed. So yeah, hard to say what this means, but from the damage that was done last week from the Eli Lilly LLY earnings, yeah, we're gonna be probably going sideways, man. So NVO is damaged. It's damaged a lot, actually. So it hit a peak in the summer at 146. Looks like it was a high of 147.94 cents. Now we're down at 110. It reports earnings tomorrow morning. So gonna have to take some time to look at it. That definitely something to look at though. HIMS I am looking at. So let's continue on with the other videos. Let's see. Quickly go through them. I think this is the Boeing one. Yeah, the Boeing one. So Boeing, the strike is over.
Some news overnight. I want to get over to Phil LeBeau, talk about it, because the strike at Boeing is officially over. So yes, one vote has already taken place, but a different kind of vote. Phil.
Andrew, this was a vote that was taking place. It took place yesterday. The results announced late last night. 59% of the machinists who voted, and this strike impacts about 32,000, but 59% of those who voted, and it was a little bit fewer than that, those members will get a 38% raise over 4 years. So the machinists are locked in to a 38% raise over 4 years. The work will resume tomorrow. I've had a few people already say to me, well, wait, why isn't everybody back at work tomorrow? Well, it doesn't happen because everybody goes back in tomorrow. It'll be a gradual increase in the number of people reporting all the way through early next week, and then they will gradually increase production. They just can't flip a switch and start cranking out the planes immediately. This will happen on a gradual basis, and that's by design. Kelly Ortberg, when we talked with him, the CEO of Boeing, said, look, we want to make sure that we do this right. He also released a statement last night saying, while the past few months have been difficult for all of us, we are all part of the same team. We will only move forward by listening and working together. There is much work ahead to return to the excellence that made Boeing an iconic company. The cost of this contract, by the way, is estimated to be about $1.1 billion. That's the headwind that will come with the 38% raise, the $12,000 signing bonus, everything that goes into this contract. But the important thing here, guys, as you take a look at shares of Boeing, is that this now allows the company to move forward with some certainty in terms of gradually increasing production through the end of this year and then obviously in 2025.
Phil, it's it's good that it's finally over, but the real question that I have when you look at what Boeing's got to do now, how hard it's going to be to dig out of this hole, and what the relationship is between management and the employees at this point.
Well, I thought Kelly Ortberg's message made it very clear. They need to work together. And when we've talked with him, and when we talked to him after the Q3 financials, he made it clear that one of his top priorities is to get them to a point where they are working together. You're going to really struggle to improve the quality if you cannot get on the same page. This has been a problem at Boeing for decades. And Kelly Ortberg knows it's not going to change overnight, but he knows that fixing the culture is as important as being able to say to Wall Street, look, we're moving our production on a monthly basis up to X number of planes. You can't. You can sit there and say we're going to move up to X number of planes, but if the quality doesn't improve, you're spinning your wheels.
I was wondering the same thing. If you have 41% of the union that did not vote to ratify this, voted against this deal, are you going to have a disgruntled workforce that's sitting there, and how do you manage that?
Well, look, with all contracts, you are going to have a percentage of workers who are not happy with the deal, and they vote against the deal. We saw that with the UAW. We've seen this, with the dock workers. You see this with all of these, and that doesn't mean that the performance can't improve. And that's the challenge for Kelly Ortberg, building the culture again so that they can say, look, everything that comes out of this particular plant, whether it's the 737 MAX, 777, 787, regardless of the aircraft, he wants to make sure that they can say to their customers, when we deliver it, it is the highest quality, that you don't have to do a shakedown and say, oh, look at this, more problems with the planes that we're getting from Boeing. He has made it very clear that is his top priority.
All righty. Okay. Let's see what we got here. Boeing. 2 more videos, guys. Palantir. All right. But before we go to that, let's see how the Boeing chart looks like. It does not look very good, honestly, to me. So I did not really like that deal, I suppose. So might try to see a 140 get hit on Boeing. Not sure if it'll drop down to 2022 levels or even, COVID levels. That's ridiculous. But you never know. Never know. I would definitely watch it though, because I think the costs of doing those deals, it will hurt in the near term. So this will be a slow turnaround, pretty damn slow. And Intel, yesterday, recovered today. So it got booted off the Dow Jones, replaced by Nvidia. Yeah, okay. It's trying to stay above that range. Not bad. Maybe you won't get a drop below $19, so that might be all right too. All right. So keep those in mind to watch. Today I saw a Vernova. I don't know why it was up so high today, but its chart is looking quite well. So it really did not care about the damage in nuclear stocks that the rest of them faced. I'll go over that article. There was some bad news on Monday, coinciding with a CEG Constellation utility company that's heavily into nuclear. So you had a lot of hit there. So perfect time to buy in those areas, I think. All right, let's play some Palantir videos, because that is my favorite company. My favorite. Oh man, cannot say enough about it.
CEO and co-founder Alex Karp, he says the results show that the value in AI is in the management of large language models as opposed to the creation of them. The winners in AI will be powered by Palantir and the losers will read analyst notes. What I want you to tell people is we need to invest even more in the government space and in industry and implementing AI that is actually changing our enterprise, because this is how we make America even stronger, and there is no real alternative to us. The stock's up over 140% this year. It's up more than 580% from late 2022 lows of $6 a share. And Adam, I'm going to go back to you on this one, because this has been a retail darling.
NVIDIA, like you said, is honestly cheaper now than it was 3 years ago on a forward multiple basis, which is incredible. That's just how quickly that company is growing.
Alex has said this for years, that they have no sales and marketing, and then everyone scratches their head.
Palantir just dropped bombshell earnings, and CNBC are lapping it up. But a Wall Street analyst has a few concerns you need to be thinking about. Let's get cracking.
Well, we've got more earnings out. Palantir results have crossed the tape. It's a beat and a big raise for the AI software company. Earnings of 10 cents adjusted per share. That was a penny better than expectations. Revenue, $726 million. That was also a beat, up 30% year over year. Palantir forecasting Q4 revenue of $767 to $771 million. That's higher than analyst estimates. Adjusted free cash flow in excess of $1 billion for the full year. 2024 U.S. commercial revenue raised to upwards of $687 million. That represents a growth rate of at least 50%. So for the quarter specifically, this is a U.S. story. U.S. government up 40% year over year to $320 million. U.S. commercial revenue up 54% year over year to $179 million. 104 deals over $1 million closed in the quarter. Customer count up 39% year over year. All, I might add, with almost no marketing or sales team. I spoke with CEO and co-founder Alex Karp. He says the results show that the value in AI is in the management of large language models as opposed to the creation of them.
That's impressive growth for a company operating with minimal marketing. It really speaks to the core value Palantir brings: AI solutions that actually drive impact without needing a massive sales push.
That quote, the winners in AI will be powered by Palantir and the losers will read analyst notes. In his shareholder letter, Karp saying, quote, "This is the software century and we intend to take the entire market." So I asked how Palantir plans to do that. Karp pointing to the defense side, a shift to software-driven with hardware-dominated military environment. The case in point, Maven, which is deployed in the Middle East. On the commercial side, saying any vertical with complex operations is where they're seeing adoption. Hospitals, manufacturing, logistics, to name a few. Karp saying, quote, "What I want you to tell people is we need to invest even more in the government space and in industry and implementing AI that is actually changing our enterprise, because this is how we make America even stronger, and there is no real alternative to us." He says it could be called almost U.S. AI, that, quote, "Our bias on this is so differentiated from the market," although apparently people in Silicon Valley are starting to understand this, "but it's just giving a structural advantage to America first and our allies second." You can see this on the battlefield. You see it in U.S. industry. The inverse of this, you see it in the sluggishness, lack of perception, and general malaise in continental Europe.
Karp's vision for U.S. AI underscores Palantir's unique approach, rooted in national strength and strategic advantage. By prioritizing real-world, high-stakes applications, Palantir isn't just scaling AI, it's defining what AI leadership means for America and its allies. Could this America-first stance give them a permanent edge over more cautious competitors?
But it's a tale of two worlds, the AI-driven world and the AI-rejecting world. So if you take a look at shares of Palantir, they're popping right now. They're up 11%. The bar was high here. The stock's up over 140% this year. It's up more than 580% from late 2022 lows of $6 a share. And Adam, I'm going to go back to you on this one because this has been a retail darling, but I know everybody talks about it as, software company, software, enterprise, but in some ways it almost reminds me of NVIDIA, because NVIDIA has been growing into its valuation, and in some ways, analysts are having a hard time wrapping their arms around how quickly it's growing into its valuation. At least that's been the case over the last 2 years. Palantir seems to be a very similar dynamic, at least right now.
I mean, look, you're back to 30% year-over-year revenue growth. You just said I think that was a golden number for the market. And I think NVIDIA, like you said, is actually getting cheaper on a forward multiple basis as it goes up. It's honestly cheaper now than it was 3 years ago on a forward multiple basis, which is incredible. That's just how quickly that company is growing. Now you have Palantir, which is kind of taking the AI trend, but not looking at it from the hardware perspective and the chip perspective, but how can you implement that into companies and governments and everything from that we're used day to day.
Palantir's growth trajectory echoes NVIDIA's rise, but with a unique twist, focusing on AI's real-world applications instead of hardware. As it scales rapidly, it's redefining AI's role across industries, positioning itself as indispensable. Could Palantir be the next NVIDIA, not in chips, but in strategic influence?
I think this is the first company that's really able to do that successfully and command the premium that we're seeing in that stock. And based on the market's reaction, I think it can keep going higher.
Here's a Palantir popping right now after the software company reported earnings moments ago. U.S. commercial revenue up 54% versus last year. And you see a U.S. government revenue also jumping 40%. Stock's up about 14% right now. Joining us now is Jefferies analyst Brent Thill. Brent, it's good to have you on. Want to get your initial reaction to these results, which really do show strong growth across the different businesses, particularly where U.S. business is concerned.
Yeah, they had a great quarter, 30% top line growth, 38% margin. So it's not just a top line field story. It's also balanced by bottom line. And the rule of 68 is pretty rare in software. So the results are fantastic. I think the biggest concern on everyone's mind is still valuation. It's the single most expensive name in software. It's twice the multiple of CrowdStrike, which is a very well-run company. So when you have a company that's multiple 2x that of one of the best-run stories, that is something that I think investors are still somewhat concerned about. But the print itself was fantastic and shows again the position that they're leading in AI, and it's good to see the government business also show an acceleration as well.
I'm glad you brought up the rule of 68. We always talk about the rule of 40. The fact that they're at 68%, I think that makes them the highest of the tech companies, maybe slightly higher even than Microsoft. I mean, it's something that CEO Alex Karp spoke to me about, and he basically said the reason they have such a strong rule of 68 is because they don't have any marketing.
Palantir's ability to achieve a rule of 68 is remarkable. especially without a significant marketing push. This illustrates how effectively they're leveraging their unique value proposition in the AI landscape. But does this premium valuation indicate that investors recognize a transformative potential in Palantir that rivals simply can't match?
They barely have sales. That's where people tend to spend. So the fact that they are very focused on their engineers and they're very focused on customer support to their customers, both on the government and commercial side, how many levers then does that give this company to pull as it pushes further into this AI application layer?
Yeah, I mean, Alex has said this for years, that they have no sales and marketing, and then everyone scratches their head like, if this is this big opportunity, why aren't you applying more sales resources to this problem? And again, every time he says that, I literally like scratch my head. I don't understand it. So to your point, if they could actually add an enterprise team, if they could market more proactively to the Wall Street community versus just the retail community, and I think there's so many steps they could take to unlock more value from this. And I think the analogy I had was at the beginning when Musk had the Tesla, it was a car that very few could afford, right? And now with the Y, everyone can afford it. Not everyone, but a lot of people can afford it as a car, right? Versus the higher end Tesla. And so I think their move is the same move, which is how do you go from very high end, only a few people can adopt you, to now mass market? And I think it may not be the perfect playbook, but I think they're following that playbook.
Palantir's focus on engineering over sales is unconventional, but it reflects a deep confidence in their product. This raises a crucial question. Could a more robust marketing strategy unlock even greater value, similar to how Tesla expanded its reach? If Palantir successfully navigates this shift from niche to mass market, we could see them become a household name in AI, revolutionizing not just tech, but how governments and industries operate.
I think everyone can come to Palantir. They're trying to get you to start small, get big with them over time. Before it was just, hey, you got to write a big check. So I think there's a lot of levers. Again, approach to Wall Street, approach to deal sizes, building that sales team. You know, there's a lot of levers that they can still pull that they haven't. Remember, well, Brent, this is an easy comp too. This is an easy comp. Comps get harder now.
Product-led growth makes sense to me. I mean, Atlassian and others have done it, only spending as much in sales and marketing as you have to, that they seem to still be selling. I don't personally know Alex Karp, but it sure seems to me like he's taking a shot at analysts every chance he gets. You've got a hold on Palantir. You know, it's up more than 12% after hours. Maybe he's talking about you. What does it take to get you off of a hold here with as high as this stock has gone?
Yeah, he likes to attack us and say that we still stay in Motel 6s, which is fine. I'm okay with that. Yeah, I mean, look, I think the challenge we have as analysts is we're here to protect investors. And the companies, in terms of the financial momentum, is an A. But when you have a multiple at 30 times, and we've seen this movie before, John, I mean, you've had Snowflake trade at 50 times revenue.
Palantir's strategy to encourage companies to start small and scale with them is a smart approach, allowing them to build trust and demonstrate value over time. But as they seek to broaden their market reach, it's crucial to maintain that balance between product-led growth and the need for a more structured sales effort. The skepticism from analysts might stem from past valuation spikes in the tech sector, but could Palantir's unique position in AI really defy those historical trends?
You had Datadog at 30 times. How did those multiples end? They're all materially lower. And so we think, again, the challenge right now is you're in a level where you have no one in their remote atmosphere in terms of the multiple. So you're going to have to go back to a TAM analysis and believe, almost like when ServiceNow was 30 billion TAM, did you think it was going to get to 175 or $200 billion TAM? And that's the only way you can make it work right now. For long-term investors, you have to look at it that way. There's no other way to value it. I mean, there's just nothing remotely close. I mean, CrowdStrike's a company that serves way more people than Palantir and has half the multiple and is the next most expensive name.
Yeah.
So, I mean, it's just, that's the hard part. Momentum's there. Valuation is the concern.
Valuation concerns are valid, especially in a landscape where many high-flying tech stocks have faced significant corrections. But what if Palantir's unique position in AI and its expanding total addressable market could fundamentally shift this narrative? With their software increasingly vital across various sectors, they might not just capture a possible with AI.
All right, man, I don't know why it cuts off so weird like that. I don't know if it's StreamYards or something. But anyway, one last video to cap out the hour. Then we'll go look at charts. We'll just look at some charts. I'm going to go through a bunch of them. See how it goes. Here, Palantir, one more.
Big tech has been finding ways to monetize AI. And one use case that's emerging is actually the military. Check out Palantir shares surging 22% after the company cited a boom in demand for its AI software from the U.S. government. And it's not alone, as AI giants are working to expand their work with defense agencies. Deirdre Bosa, in fact, digging into that trend for today's Tech Check. Hi, Deirdre.
Hey, Kelly. So Silicon Valley's relationship with defense and military, it's evolving from the reluctant to the interdependent, largely thanks to what else? Artificial intelligence. That is on display this week from Palantir and Meta. And it'll be a question for other big tech names like Google as the race to develop and deploy AI technology as it becomes a bipartisan autocratic versus democratic, U.S. versus China issue. On the Palantir earnings call last night, CEO Alex Karp, he really highlighted the opportunity. He said many times that their U.S. government business is booming. It grew 40% year over year. That was a seven-fold increase. That let Karp raise full-year guidance and pushing shares to record highs today. Karp said that he is seeing the adoption of Palantir technology in every part of the U.S. government, including, quote, the White House, Congress, defense, intel. Then there's Meta this week announcing that it is opening up its Llama AI model to U.S. agencies for military purposes. Now, that marks a major shift from policy previously that had banned the use of its technology for such efforts. Earlier this year, OpenAI reportedly softened its own stance on the use of its technology for military applications. Now, Google, the poster child of Silicon Valley's skepticism and reluctance of government collaboration. This will be an interesting one to watch as we see more collaboration. When Google acquired AI lab DeepMind in 2014, Kelly, it committed to borrowing its technology for military or surveillance purposes. But as AI increasingly becomes an issue of national security and maintaining U.S. competitiveness in the face of China's ascent, will it also reverse course? It is certainly the one to watch, especially because of its turbulent history with government defense contracts, Kelly.
You know, Alex Karp has been such a kind of breakout player in this area who's unapologetic for their work with the government. And it seems as though he's almost giving voice to now what the rest of big tech is starting to do a little bit more quietly.
Yeah, and he's been saying it for a long time. There was an interesting response to a question on the earnings call last night where he said when they were getting started, people were worried that they were getting too many government contracts, and how that has changed and how Palantir has really helped build up an industry that extends beyond Palantir. There's Anduril, of course, other startups in the space. But this development with big tech is really interesting. It's almost a throwback, too, to the way that Silicon Valley originally developed after World War II and in the Cold War. They've had, you know, a really close relationship with government in the past, but really in the 2010s, they grew further apart. So what we're seeing is maybe a return to that. And it's very interesting to watch, but really it's AI that is forming the backbone of this.
Investors love it as well. There's no better client than the government.
Exactly.
Steady revenues. Anyway, Deirdre, thanks very much. Deirdre.
Oh, back to the old days, right? That's what Be Brave and I were talking about way back when, probably several weeks ago. Now, I think. Talking about the semiconductor industry was formed based off of industry funded by governments. Now, let's see how it goes. Okay, so yeah, I don't see much happening after hours for some of the stocks. Let me put up the earnings. For the rest of the week. Let's see. Okay, so we got Supermicro after the close. It's down back to $24 a share. We have to see how it opens. We got two gold, silver miner stocks like Pan American Silver, PAAS, Kinross, KGC. Yeah, and we have Exact Science. This one, I might look at some other ones here. Yeah, Exact Science is down like 28% or something, I think. It's pretty terrible. So I think that's the CRISPR DNA splicing technology. Most of the ones we seen yesterday for Monday's earnings, we have Cliffs, CLF, that's iron. Yeah, that was down. Most of the NVTS, Navitas, Lattice Semiconductor, LSCC, and NXP. So all those semis were down. So they weren't giving out anything good except for ALAB, ALAB. So Astera Labs, small semiconductor company, apparently up 30%. But yeah, very risky, I would think, to play that. But yeah, I like the way the chart looks. So out of all the semiconductors yesterday afternoon, terrible. And we'll focus on HIMS, HIMS, HIMS and hers. Okay. And I'll talk about some about the nuclear stocks led by CEG, the utility, and they had bad news from the federal government. Tomorrow we'll have Celsius Holdings, CELH, my favorite stock to look at. I'm not in it anymore. What energy drinks, all that stuff. So we'll see how that goes. Novo Nordisk, as you remember, Ozempic, all that nice diet pills. CVS, kind of a bellwether for how most of the other healthcare stocks will do in some sense. You'll look at Clover afternoon, CLOV, and it's not on here on this list, but I think around the same time Thursday morning it'll be Oscar, OSCR, so healthcare stocks. And Wednesday after close, yes, ARM, ARM, and Qualcomm's, QCOM. So both of those definitely will affect the NASDAQ a lot. Right now, what we've seen so far from Monday's companies and semiconductors was not really good, not very encouraging. It also adds to the bad news from what was that company? Oh yeah, Samsung, plus another one, but Samsung mostly. Yes, they did not sound very nice. So yeah, Qualcomm is going to have to recover. Otherwise, if it doesn't recover, then most of the NASDAQ is still reliant on the Mag 7. And you're only going to have NVIDIA, which is in a couple weeks. Yeah, in a couple weeks near Thanksgiving. So that's not going to help for another couple weeks. We're going to be stuck with that. Okay. I think I'm going to look also later on Thursday. You're going to have Gold's, GOLD, Barrick, D-Dog. It was mentioned in one of those videos, D-Dog. They were complaining that Palantir is overpriced like D-Dog was and all these other high-flying software. Yeah, software stocks are very annoying to evaluate. If they don't see growth, like Palantir is right now, they'll punish it. They'll punish it very badly. So people get burnt on those. But if you pick the right tech companies, you got the right CEO, in the long term, they should keep on growing. So I think Palantir is one of those really good companies that can have very high expansions, multiple expansions later on. So you could see it as a $1 trillion company, right? Right now, you're just like, wow, it's an overvalued stock. It's ridiculous how overpriced it is. But these guys grow. If you guys want to stay safe and go into something that can give you profit every quarter, they don't technically take chances and risks and grow. So that you won't get those huge share price gains, right? So anyway, going back to gold, yeah, GOLD. So we have two of them reporting today, silver and Kinross, and then we have gold, GOLD, Barrick Gold on Thursday morning. VST, Vistra Energy, we mentioned this before. this one before. I forgot if this was the SPAC or it was the one Tropes mentioned. Yes, I think it was the one Tropes mentioned. Okay. Yeah, I'll have to look and see. This chart is kind of dangerous. I don't know. Can't really say you want to be a buyer right now. That's for damn sure. That's for damn sure. Okay. Halliburton, yep. And CCJ for the nuclear energy. CCJ, yeah, nuclear miner. Cameco. Definitely have to look that on Thursday morning. And Thursday afternoon, ANET, Arista Networks. That's one of my favorite stocks. I mentioned that before. And we have DraftKings, DKNG. You have Airbnb, ABNB, and Pins. So we'll talk about those some other time after the elections. But for now, let's go through what we have in charts, in terms of charts for what was reported last week and into this week. So let's go through them real quickly so we can end this fast. So might as well start with VST. Yeah, VST, Vistra Corporation. Let me see if I got something here. VST. Yeah, we're still above this range. I don't know. If it gets to 105, probably, because once this moving average, this 18-week moving average gets closer to there, yeah, it looks more attractive. From the daily, it looks like it wants to go, but yeah, we have to wait for earnings though. Yeah, this is a tough call here. Gotta see how earnings go. Let's see what the monthly chart looks like for VST. Yeah, no, it's too far away. It's way too far from the 18 moving average for the monthly. So the hourly chart, yeah. I don't see much strength here. Yeah, all right. VSD, just put on the watch list. So SMCI reported, so it's down 11 to 12%, back below 24. So I say, let me move this. I say anywhere around the 26 area, yes, you can take a chance to buy. So we've gotten through earnings. They're gonna, I think they're gonna speak right now. It should be. They should have started the earnings call. Hopefully, with elections and all that, it doesn't crash 50% tomorrow morning. I have no idea. If it doesn't, if SMCI tries to hold at least the 22 area and tries to come back into Powell, yeah, I would be adding more. So right now I have some at 28. That was my initial buy. I bought some below 25, so around 24 and a half. And then I'm waiting for the last bit here at 22, which is like probably, I could say, the support level around here. Yeah, around that area. Kind of like where this last green bar here. That's about it from a chart perspective. I can't tell you if this company is really gonna go bankrupt or at least have long-term issues to deal with the finance, because if Nvidia cuts their contracts with them because they don't believe that they're gonna do their deals, I think what I'm seeing is that they have issues in the financial sense because they sold products to Russia and China when they were already got sanctions, so they can't report the money that they made from there. So right now what we're seeing is they're taking those off of the earnings, and they can't give guidance right now. They got to go through all the accounting, figure out which pieces actually went legally, quote unquote, that they can report. So I don't know how much of a fraud it is. If it's not that bad, then you're fine, right? Otherwise, as you've heard in some other, I think I played that video where someone claimed that, well, if SMCI is really a bad actor, then NVIDIA can just go and talk to Dell and make them build the boards for their chips. And SMCI is a big player. I mean, when I went to work, I saw tons of their boards everywhere. There was always boxes with SMCI logos everywhere. They are not small. So if I was working in a small company making boards, using their boards, think of like NVIDIA and all these other ones. So right now the chart is quite damaged. You're taking a chance buying down here. You are what they call a bottom feeder. You are fishing in the depths of wherever. So there are no guarantees. Most people, they would wait and see if this thing can try to form a base before jumping in, right? But you never know. This could be an easy recovery when NVIDIA does its earnings in a couple weeks. If NVIDIA just says, nah, we're cool with SMCI, pop just before Thanksgiving. And then once you get the Thanksgiving hit and the rest of the market jumps up, yeah, this could be a high flyer. Like you could get a snapback right back into that weekly moving average, $50, right? So this thing could go $40, $50 from 27, 28, 22, right? Let's say this is the range. Let's say you get around between $22 and $28 and just get out 40, 50. You can keep some for the long term just in case into next year. Yeah, you can do that. But yeah, I'm just looking for opportunities to get a quick trade here. It's not something where I'm just like, oh yeah, it's like Palantir. Okay, Palantir is a different looking chart. Okay, you buy here, there's a trend going up. See the difference? So hopefully you guys get it. Hopefully you guys get it. Get it. Okay. Alrighty. Now let's look at the other ones. I talked a little bit about Mexico, EWW. So I said yes. I am looking to see if it drops. If Trump wins, drops to $46 a share. But I'm a gambler, so if I see MEXX the 3 times ETF of EWW drop to 8, that's the way to be. We can also look at Mexican cement. I discussed this a little bit a couple times and compared it to another cement company. And this one is very tied to Mexico, Central America, and North America. So right now it's right below. It's been hanging out right below this bluish line. I guess lavenderish. Not really lavenderish, but okay, bluish line. And I'll have to see if it drops tomorrow on Trump. If it does, maybe it's worth it, right? You never know. So that's CX, Mexican cement, CEMEX, CEMX, MEX is the name, ticker symbol CX. Definitely should look into that. And I said talk about healthcare, Oscar Health, OSCR. So this health insurance SPAC Thursday morning. So you see this kind of pinch between the 18 and 40 on the weekly. Yes, I like that. It's kind of going sideways since May. Yeah, I think so. Looks like it's going to fight this area. So you see this red bar, huge one in November 21. Yeah, 2021. So that's going to take some time to work it. But once it does, it can fly. Yeah, this thing can fly. So that's why I'm looking at these SPACs I was discussing. That stuff. Maybe this wasn't a SPAC. Actually, it didn't start at $10 a share, so it probably wasn't. But Clover is its competitor. This was a SPAC for sure. See, it starts at $10. That's when it opened. Yeah. So SPAC is a special acquisition company. So they can't do a normal IPO. They'll use this. So Clover, CLOV. Yes, so it will have earnings tomorrow after the close. Definitely watching this. So it's made its base here. So it could be interesting. Could be interesting looking stock. I don't know. It might fly up, but it might not. So I'm not going to chance like telling people what to do before earnings. I don't like that. But Oscar, definitely something to watch here. It has a nice trend. Clover sort of overstretched on the weekly. I think it's gonna have to work it a bit more around the $3 area before we move on. Now, Hims is the stock to watch. So this one, I think it's gonna have to go sideways. So after the reaction today on earnings, I don't know what's gonna happen with NVO Novo Nordisk tomorrow. So this is a Novo Nordisk chart. If it says bad things about drugs, the weight loss drugs, yeah, this thing can go back down to 90, because if you look at the weekly, that's terrible. Like, it's already lost its trend. The monthly still looks okay, but the damage here, if you look on the monthly, yeah, the damage is quite terrible. So it's significant enough that it can just drop back to 82 even. Like that's possible. That is possible. So if Hims gets pulled into it, because it did with the Eli Lilly right here. Yeah, see? Yeah, it's in the bottom of its range. It can go sideways. I think it's going to wait for it if you're lucky. Like, let's say you're long term, you didn't sell anything at the near 1,000. So you've been long this thing since hundreds. 2019. This is a very nice stock long term, but yeah, once you see a certain damage like this, and we're not even done with the month, right? For November, I have no idea how Novo Nordisk might affect Eli Lilly LLY. Yeah, so be aware. Like, it's not looking very good in this position on the monthly chart. So you have to watch that, see how it affects Hims. Hims, if you bought it at 18, near 18 when it dipped last week, that was a good trade. Going there into the earnings, that is a fair trade. But for long-term investors, you gotta wait. See how this 18 goes closer, as it goes closer to the 40 moving average. I think you're gonna have to make a range. You kind of made a double top in a way. You've regained almost near your highs of 24. So it kind of hit 25 and a half. But yeah, that's close enough. And so I think it's going to have to go sideways from here. And so watch it into next year. Definitely Hims, HIMS. I'll read an article. Yeah, I'll just read an article. So far, SMCI is still stuck at 24. So yeah, we won't know. See, at least it's not down 50% like the other guy was saying. I don't know. It could be down 50% or up 50%. That might be a good sign to buy some more tomorrow. So then if it's just going to be 24, that's really close to where I last bought it. So I bought some at 28, 24. Like, you got to give me a reason to buy. Either it's going to climb back up when it opens tomorrow, or if it drops lower, then I got to see how it drops lower, because otherwise, yeah, I'm not going to toss money into the fire pit here. Like, I got to see some real reasons. All right, so Hims, IBD's 50s number 2 stock. Hims and Hers smashes estimates on robust obesity trajectory. Hims stock rose early Tuesday after compounded weight loss drugs help build on a robust trajectory. Okay, compounded, I won't go into the definition. I think okay, let's see. The online pharmacy is well known for its compounded version of Novo Nordisk, a semaglutide. Okay, Novo sells semaglutide as a weight loss drug called Wegovy. But while it exists on the Food and Drug Administration's drug shortage list, compounding pharmacies like Hims and Hers can step in to fill the gap. So compounded is kind of like generic. All right. I won't get into that right here because I already discussed it a bit before. So during the 3 months ended September 30th, Hims and Hers earned an adjusted 32 cents per share on $401.6 million in sales. Earnings flipped from a year earlier loss of 4 cents and crushed expectations for a 13-cent gain. Sales rocketed 77% year over year and topped calls for 382 million, according to FactSet. Our model is rapidly gaining scale, driving accelerating top-line growth, improving profitability, and strong cash flow, CFO Yemi Okupe said in a statement. We are seeing this strength across our business. Our new weight loss offering is helping a growing number of people and providing an accelerant to what was already a robust trajectory. Okay. Notably, during the September quarter, Hims & Hers topped 2 million subscribers. More than half of them are using personalized solution. That's up 175% year over year, the company said in an email. That's one of the benefits of compounding medications, said Matt Montez de Oca, Chief Clinical Officer for Strive Pharmacy. Strive is another compounding pharmacy. Sometimes patients can't tolerate the dosage that comes in the auto-injector or pen included with the branded medication. Compounded drugs offer the ability to step outside the titration scheduled by these pens. That's interesting. This is key for drugs that mimic the GLP-1 hormone like Novo's semaglutide, and Hims & Hers is also leading on this strategy. The company noted in a recent survey of 920 customers, 90% of customers were satisfied with their personalized dosing regimen, and 87% were progressing towards or had already met their weight loss goal. Hims & Hers raised its guide for the year and now calls for $1.46 billion to $1.465 billion in sales. 3 months ago, the company guided to a lower $1.37 billion to $1.4 billion in sales this year. All righty. Yeah, very nice. I think that's very nice. Okay. I'm going to talk about this next, the constellation and nuclear data center stuff. Yeah, I'm going to talk about this next. Let's see. But let's go through the tickers again. Okay, guys. So we can wrap this up in the next 30 minutes or so. So Hims & Hers, right? HIMS. Keep that on the list. Novo, NVO tomorrow morning. Watching that. So I'm going to look at home builders, okay? If you remember, I was talking about this because the DR Horton was the first home builder report last week. So we had DHI report, and today we got a little recovery. So for the whole week this week, we have a green bar so far. And so the ITB ETF, so we're hitting here at 121, about there, okay? And you see this falling 18 daily moving average. We've already crossed over below the 40 moving average. So we hit the support area, we've recovered. So that's it. I think that's it for now. I think the damage is kind of too severe for it to just climb back up to the top. I think we're going to go sideways and try to hit back here in the 112 area for ITB, okay? Because that's when the most of the other earnings are reported for this sector. So we haven't gotten other earnings yet. Now, Nail is the ETF I played. That's 3X ETF. So if you played it quickly for a quick trade last week from here to here, it's about 22%. Not bad, you know. But I would hold off. Like if I think this is going to continue up, I'm going to have to see how bonds are doing. So this sector, the home builders, definitely very, very sensitive to how bonds are doing. Just like XBI, biotech, right? You see here, biotech did pretty well today. And guess why? Because you see TLT bonds coming off a bottom. That's very bullish, right? People are just expecting, oh yeah, okay, bonds have found a bottom. That means we at least know where the peak yields are for long bonds, and it's better off we go into biotechs. And if you think the mortgages aren't going to increase, we hit the peak mortgage right around 7%, then yeah, home builders will continue up. So we've hit a little rough patch here for this earnings season. So we got to see how the other earnings are doing. So let's say we go sideways, up and down, up and down, up and down. We go hit here, then yeah, I would buy it if it drops below 115, right, for ITB. If you're in nail, then yeah, wait a bit in nail. Maybe you wait for 120-ish, 125, and you get nail, and you can sell it at like 180, 190, whatever it goes into next year, right? So we'll see how that goes. We have to wait for elections too. Elections will affect how bonds and Powell as well. And I think what's the other sensitive sector for? Oh yeah, regional banks. This is the telltale sign. Yeah, you don't want this to get too bad. So if you look at regional banks and XBI together, yeah, they're the most sensitive to real interest rates, Yeah, you got to keep this in mind. We've kind of recovered from the whole incident with, what was that? Silicon Valley Bank, the bank run down here. Yeah, the whole bank run from March into May. And then you had the Fed step in and the Treasury Department step in, try to save all of them little regional banks. So yeah, we're back at the top. Looks like this thing's kind of curling up. It wants to go higher. So I think we're just waiting on elections and Powell. And if this thing pops, risk on, baby. Risk on. So yeah, look at XBI, KRE, look at those sectors. If you see those sectors moving up, then I can recommend more riskier looking stocks. So this segues into solar stocks, right? I don't know if Trump is going to make a big difference on solar, but I would say what's beautiful about solar stocks is its volatility. So that's really the key. That's really the key about it. And JKS, Chinese solar, so you can see it's making quite nice moves up and down. You can get at 17, go to 36, go to 20, go to 28. These are huge moves, right? And then when you look at Nova, NOVA, it had earnings last week. It dropped below. Okay. So it opened, it dropped, it came back and closed higher. That's beautiful right there. The way it closed right like this. And then now it's just continuing up. So today it closed 7.79%. Watch this. Watch this for elections. It's crossed through this, entering the range, crossed through this cyan line, bottom cyan line. So it could move from 6 to 7, 9 to 10, right? Maybe even more, right? We could go to the top of this range, $11. So there's still room to move up here. It'll take some time, though. We finally crossed above the 18, so I think I would expect a pullback. So watch NOVA, watch JKS. Okay, we have Chinese meeting right now with the Standing Committee of China. So you never know, because I'm seeing certain stocks move up, like today. Kingsoft Cloud. So that's KC. This is a Chinese cloud AI, whatever software company. It just popped today, 19%. I don't know if it was news specific to the company or just because these guys are getting some nice stimulus from the Chinese government that people are rumored to get in. So we'll see. The other one is YumC. They had earnings. So Yum China. So they got the KFC in China. They got your Taco Bell or whatever the crap in China, right? So these guys are in here. They popped yesterday 7%. So there are outperformers in Chinese stocks right now. Looking at this charts, yeah. So YUMC, YUMC. Look at them. If you don't invest, it's just a good trade, right? Because like most people would just look at Baba, but look at Baba. It ain't going nowhere. I mean, it looks like it might be ready to pop because we see the moving averages ready to kiss. Maybe it will just collapse. I don't know. Like that's kind of too close to comfort right here. And then you got JD, right? Look at that. Not this looks a lot better than Baba, but still. And PD Pinduo, like so. This is Temu right there. But hey, you know, if you look at outside the box, you look at some other stocks here. If you're gonna put your money in a trade for China, you got to look at this and wonder what's going on. Why is this thing popping 20% on high volume right here? Something's up. And you got YUMC yesterday on earnings, also very good. So there are things out there in China to look at. Okay, so let's go back to the charts. See, I got about, I still got half an hour. I can go through this with you. So I was looking at solar stocks. Here's another one, ENPH. They announced earnings like quite a while ago. So this one was 2 weeks ago. So it had a drop about 15%. It recovered. Now it's recovered. It closed that gap. You see this is a gap. Recovered. We hit the 18 on the daily. Now let's look at the weekly chart here. Yeah. You see this is pretty weak. I wouldn't say this is a good long-term investment per se, but hey, you got a double bottom from November 23rd. If Kamala wins, boom, right? So keep that in mind. First Solar, this is much better than Enphase or Nova. Look at this on a weekly, not bad. It kind of is making a trend since the early January 2024 into like late October 2023. So maybe it had this, must be a news event here on May, but it lost most of it. Looks like it lost all of it into earnings. So that's gone. So we reset whatever this news event was. Let's see what happens. So first Solar, FLSLR. I would say like a lot of this is just dependent on, again, government spending and how the interest rates work. We have this one, lithium ion battery maker. It's been in a range for quite a while. It's really a bad looking stock, but just in case we have a solar boom, I would watch it anyway. ENVX. So it had earnings last week, right? Okay, so it's two software stocks to look at that were mentioned in a couple of videos today or several streams ago was Dynatrace, DT, and Datadog. Okay, so both of these. I don't like software stocks in general, except for Palantir, but I have a feeling that if we have a lot of liquidity coming in, people are not going to be chasing Nvidia, all right? Nvidia or hardware stocks. I think that is too crowded right now. But they'll take stabs if there's enough money floating around. They'll take a stab at a trash or overvalued stock. So DDOG is probably way overvalued, right? And then you can look for trash software like this AI, Recursion Pharmaceuticals. You can look for something that's really speculative. So it's going to have earnings Thursday. Yeah. So I'll look over some of these AI stocks. I think one was reported today. Let me see. It was BBAI. All right, let me look at it. BBAI. Okay, BBAI. Okay, it's down 7.65%. It was up 9.63% though, so whatever. That's really nothing. So let's look at the chart. Yeah, still stuck here. It really hasn't done anything since it popped. You see, like most of these software stock, these more speculative ones, they have this kind of like, oh, it was a SPAC too, huh? This was a yeah, okay, this was a SPAC, BBAI. Yeah, you see, pops, drops, pop. Yeah. Okay, I get you. Okay, the other ones like I would look at is Sound, SOUN. Okay, this one's sponsored by NVIDIA. RXRX sponsored by NVIDIA. So there you go. Let's look at Duke Energy. I think it had earnings, didn't it? Or will have earnings? I don't know why I put it on here. Yeah, we'll have earnings on Thursday morning. So, yeah, watch that. Watch that. I think another energy corporation, Devon Energy, they had reported earnings already. Nothing much. I think if you're an oil U, so I'm doing the 3X ETF for XOP. So yeah, it's forming a bottom. It's forming a bottom. I mean, I was kind of pissed Friday. It kind of popped on earnings, but then ExxonMobil started going down and pulled the rest of it down. So it was like, oh, the whole ETF went down for the rest of the day. So you got this red candle. Pretty annoying. It went nowhere, basically. So recovered some of that. All right. Okay, good. Fine. But I don't know. I think it'll take a long while before oil stocks really do anything, unless Trump wins tonight. Then maybe it'll do something exciting. But okay, let's go through the nuclear stock. So this is not nuclear specific stock, but it's a utility stock that's heavily invested in nuclear. So it's Constellation Energy Corporation, CEG. Okay, so I'm gonna go and look at the article here. So this was the article I was talking about. Talon, Constellation, and Vistra tumble. So Vistra was VST. You remember that? After government rejects Amazon nuclear data center agreement. Federal Energy Regulator Commission rejected a request to increase the amount of power to Susquehanna nuclear plant can dispatch to an Amazon data center complex. Okay. Let's look at the power substation right here of the LC1 Cloud HQ data center. Look at that big bad boy data center. And you got all this power going through it. Man, just for you to get your chat GBT results, huh? All right. Amazing. Alexa, can you tell me which stock to buy tomorrow? Yeah, I don't know. I don't think Alexa can do that. Anyway. Technology companies push to directly power artificial intelligence with nuclear plants hit a major roadblock after a federal regulator rejected a request to increase power for an Amazon data center. The Federal Energy Regulatory Commission on Friday rejected a request to increase the amount of power to Susquehanna nuclear plant in Pennsylvania can dispatch to an Amazon data center campus. Independent power producer Talon Energy in March sold the data center complex to Amazon for $650 million, which would be powered by the nuclear plant in a first of its kind deal. Talon's stock fell more than 5% in pre-market. Okay. Constellation Energy and Vistra tumbled more than 11 and nearly 3% respectively in sympathy. The grid operator PJM Interconnection and Susquehanna plant, which Talon owns, has filed a request to increase the amount of power dispatched to the Amazon data center from 300 megawatts to currently 480 megawatts. The arrangement, called co-location by the power industry, could have huge ramifications for both grid reliability and consumer costs, said FERC Commissioner Mark Christie in his opinion. Talon said FERC's decision will have a chilling effect on economic development in states such as Pennsylvania, Ohio, and New Jersey in a statement Monday. The power company said it is evaluating its options with a focus on commercial solutions. The Amazon data center campus can still use 300 megawatts of power from Susquehanna nuclear plant, according to Talon. The company said the deal is just and reasonable and in the best interest of consumers. The FERC decision does not directly affect Constellation's plan to restart the 3 Mile Island nuclear plant in 2028 through a power purchase agreement with Microsoft. 3 Mile Island will dispatch power to the electric grid rather than directly power Microsoft's data center. But Constellation and Vistra have expressed interest in striking deals with tech companies that are similar to the agreement between Talon and Amazon. Data centers that power AI and cloud computing are consuming growing amounts of electricity. Utilities are scrambling to find ways to power the growing electric load. Tech companies are increasingly turning to nuclear power, besides it is reliable, fossil-free, and does not emit carbon dioxide. Alrighty, I think that's enough. So I think you guys got the idea there. So let's look up Talon and stuff. I haven't even looked at that chart. Okay, let's look up. So CEG was the one of the stocks mentioned. It's still hanging out at the bottom here. So right below this green candle, I think the damage is pretty severe, as you can see. That's the last high was in May 2024, outside of the high it made in October. So we're stuck here. Gonna be stuck here for a while. So if you're looking for a utility stock to buy, yeah, this might be a consideration. I mean, I'm just in Hawaiian Electric. Okay. It's building this little base, Hawaiian Electric. You got PCG for California, not bad. So I think so. I think the weekly chart, yeah, I don't know. You might wait for a time to buy if you're not already in it. And let's see. XLU overall, it bounced off this 18 on the weekly, so not bad. XLU, like you heard from Hugh Henry, it's doing quite well. You see, it's kind of like doing this top from 2022. It's doing that top. Very nice. But let's look at the other ones. Look at the other nuclear stocks. So I got Lightbridge, right? I think Lightbridge. Let's see. Up 13% today. Man, it hit correctly right at that 6.65 purple line I drew. Just eyeballing it, you know? It hit it perfectly. Perfect. It bounced here. So I drew this green line today based off of this gap here. So I don't know. You know, you got this 18 rising daily moving average. You hit this line, you bounce back up. Not bad, not bad. But the damage is pretty severe. So if you're looking at the nuclear energy stocks like this, I would say like it's gonna go sideways for a bit. Let this thing climb up. You know, let this 40-day moving average climb up. And if you look at the weekly, it's way far away. You know, so be patient. I don't think it's time to jump into something as volatile as this. LEU is another one. LEU down 3%, almost 3% today. You went over this resistance area. This was set way back when. Yeah, I think I just drew it off of here by eyeballing it. February, March 2013. And then you kind of hit it again in November 2021. So yeah, just hold on. This might be really good. You got a lot of volume, like really, like last month and now this month. Yeah, you got a lot of volume. So LEU, just watch it. And let's see, CCJ, the minor. Yeah, okay, this thing's still okay. Yeah, I think so. It's gonna have earnings this week. I showed the calendar. Yeah. Yeah, so uranium mining stocks, yeah, still kind of, let me see. Yeah, you still got a downtrend. It's pulling back to 45. Yeah, it's okay. It's okay. Let's see. Any other ones I wanted to look at? I don't think so. No, I don't think so. LEU was the other one, right? Oh, NNE. Yeah, that's the other one Blacks to Defy was telling me about. Okay, so it dropped on Monday. Would this be a good time to think about it? Oh man, okay. I don't know. You had this huge move up here. So these bars will be pretty significant. So let's say this one. Let's say this one. So that's kind of like halfway, right? Almost halfway, right? About halfway. So this kind of coincides with this top here in July 2024. And then you go into September 2024, you have a resistance here. You pull back, you go back up through it. Now you're kind of near it. Yeah. Okay, maybe. NNE, maybe. Now that it's back here, close to 16. Okay, keep a watch on it. NNE, nanonuclear energy. It doesn't have much history, though. Okay, guys? You're taking your chances here. But I don't know. Yeah, that's not bad. That's not bad price. Yeah, that's not a bad price. Okay, keep that in mind. Now let's continue on. We got 10 minutes. 10 minutes. Let's see what other stocks to look at. Close this one. Close that one. Okay, now close that one. Okay, we went through here. We went to Duke. We went to this. Let's go Zim. Zim doesn't have earnings, but it is one of my stocks that I like because I bought some at 24 just in case the strike lasted longer than a few days. It didn't last longer than a few days. The longshoremen made a temporary agreement. It might come back later, next year, but who knows. Came back to 18. Okay, I buy it. 18, 19, whatever. 18, 19. Comes back up, pulls back. Now it's back up at 20, near 25 today. It has earnings just before Thanksgiving. I think a lot of the shipping stuff will have rates because okay, actually I do have an article. Never mind, I do have one. So I'll show you the shipping rate article. Here we are. And I'll read this one for you guys. I should put this in chat. So this was the Hims and Hers article. I forgot to put that in chat. And the CNBC article on the federal nuclear thing. So I'll put this up here. Hims and Hers. Okay. And this is a nuclear article. All right. There you go. And now we're going to the Maersk. I don't know how you pronounce that. Maersk. Maersk. So this is a shipping one. So since we're looking at Zim, which I think will go up to $50 a share. So let's see. I'll present this one. So Maersk saw strong demand in Q3 driven by China and Southeast Asia exports. Shipping company Maersk said on Thursday, this is October 31st, it's quite a while ago, but it's really relevant to how you want to look at Zim is going to do. It saw strong demand in the third quarter, especially driven by exports out of China and Southeast Asia, while the global supply chain continued to be upset by the situation in the Middle East. Maersk also confirmed robust preliminary third quarter earnings released, right? Okay, and also raised full year forecast back to on the back of its profit, solid demand, and the continuing disruption to shipping in the Red Sea. Container trade remains strong in Q3. Demand is estimated to have grown 4 to 6% year over year. Exports out of China and Southeast Asia make a very large portion of such growth, the Danish company said in a statement. Maersk, viewed as a barometer of world trade, said China's economy continues to be marked by manufacturing overcapacity and a reliance on export-driven growth, while domestic demand and consumer confidence remain subdued. So I think that's a good segue, actually, to let me see if what's the other screenshots. Was there any other screenshots? No. Let's see, next one. I think there was another version of this. Yeah, let's do this. So this was an updated one. So it's the same article, but it was updated. So Maersk sees no Suez Canal return until well into 2025 due to Red Sea threat. Okay. So this was the same article, but then they updated it with more commentary about the Red Sea. Attacks on vessels in the Red Sea by Iran-aligned Houthi militants have disrupted a shipping route vital to east-west trade, with prolonged rerouting of shipments pushing freight rates higher and causing congestion in Asian and European ports. There are no signs of de-escalation, and it is not safe for our vessels or personnel to go there. Our expectation at this point is that it will last well into 2025. That's good. That's good. That's good for Zim, anyway. The company said it had seen strong demand in the third quarter, especially driven by exports out of China and Southeast Asia, and it saw no signs of a slowdown in volumes from Europe or North America in the coming months. Management was bullish about the near future and highlighted good demand for container freight. Okay, nice. So we'll see how Zim does when it does earnings in a couple weeks. All right. All righty. Now, I think that's a good time to talk about this article here. China stimulus questions to persist long after meeting this week. Meeting in Beijing set to unlock fiscal resources for stimulus. U.S. presidential ballot this week adds to uncertainty for China. Now, the interesting thing is, so there's something called the Standing Committee in China. So that's the smaller part of the Chinese government that actually makes all the decisions. Okay, so you can pretty much say that these guys will set policy, and they'll meet again a couple times. But what kind of stimulus they'll run is the key problem here. The stakes have grown for this week's conclave of the Standing Committee of the National People's Congress, the executive body of the nation's top legislature, as it's expected to round out China's largest effort to lift growth since the pandemic. The session in Beijing on November 4th to 8th will probably unlock additional resources meant to take the pressure off local governments and recapitalize major state lenders, according to banks such as Goldman Sachs Group and HSBC. But with the U.S. presidential race still tight and Chinese policymakers putting priority on the more immediate challenges facing the $18 trillion economy, it may be months before detailed plans to support consumption come into focus. Policy setting meetings in December or March are the next key dates to watch for clues about measures to prop up consumer spending power, which will be crucial to turning around sentiment. They don't want to come up with a big number and then not be able to get it done. The government is very cautious about spending. The lingering suspense over the pacing and targets of fiscal support will complicate investment decisions for traders. Okay. So the outcome of the US election could also force Beijing to strengthen efforts to bolster domestic demand. Given the threat by Republican nominee Donald Trump to impose hefty tariffs. So economists at Goldman Sachs, Macquarie Group, and Nomura Holdings predict lawmakers this week will back at least 1 trillion yuan in quota, a special sovereign bond issuance, to replenish bank capital. They also expect approval for an increase in local government bond sales either this week or in the coming months to swap so-called hidden debt over several years, with forecasts ranging from about 6 trillion yuan to 10 trillion yuan. Nomura anticipates the eventual scale of China's fiscal stimulus package to reach 2 to 3% of gross domestic product (GDP) annually over the next several years, with a Trump win to push its size towards the higher end. For us, the specific size of the stimulus package is less important than the area of focus for the package to be deployed. Property is important to stabilize sentiment and growth, and China could focus on stimulating consumption. So here's a good chart. You can take a snapshot of that. China's fiscal spending, not a boost to growth yet. Here's China's local government infrastructure funds are spending less. Not good. That's not good. Well, I mean, that's what's going to happen. There's not much you can build out in China anyway at this point. This week, legislative huddle may not be the deadline for raising the government debt limit, according to Goldman economists. A later meeting by lawmakers around year end and the NPC's full session in March are also possible windows to watch. Investors may get a glimpse of what may be on the government's planning board even before that. The Politburo, made up of the ruling Communist Party's top 24 officials, including Xi, usually holds a meeting with a focus on the economy in early December, days before the Central Economic Work Conference takes place, to set the agenda for the coming year. The good thing is that investors are more afraid to short now, given that we don't really know the number that will come out, and there is more room to get the next meeting right. The consumption part is the wild card. All right. So yeah, I think there is potential in Chinese stocks to trade at least into next year. I think you got this kind of wishy-washy type of thing. You don't know if Trump's going to win. If Trump wins, then you're going to hear a lot of like tariff talk that might push stocks back down in China. It might be a great time to just trade it. You know, there's a lot of trading opportunity at that point, just to get a reaction, because then China will just hit back with more stimulus. So yeah, you can read this article yourself. Yeah, I'll just put it up. But let's go back to the charts. I'll put this article in the chat right here. So back to Zim. Yeah, I'm going to see how that goes into $50 a share or $40 a share. Let's see. Making this nice range. It's a beautiful looking chart. This is perfect chart. I don't know. We'll see. It's kind of stretched out from the weekly, but yeah, we'll see. Now we have a silver stock here. PAS. I don't see anything any movement after hours. It should have reported already. KGC reported not much movement after hours, 1 point, so it's still good, doing good. Gold mining and EXK, my favorite. So I already sold a bunch here. Let's see if it can, what kind of sideways range it can make, and we can buy EXK again. Now, agricultural stock. So this is more related to fertilizer and other things. I believe it had earnings already, didn't it? It should have. Yeah, I think it did. Yeah, it did. It should have. So only preliminary? That's weird. It should have came out with the real earnings. Okay, something went wrong there, but it dipped to about $50 a share. So I don't know. I'm looking at this chart. So I've added on to the other agricultural stocks like Nutrient, NTR. Yeah, Wednesday. So let's see. So man, ADM, Archer Daniels Midland. So it should have reported. I don't know. Strange. So it hit here. I don't know what news made it drop in January 22nd of 2024. Something happened there, but it dropped right back to that point. We see Nutrient NTR. It's kind of making a bottom maybe here. Maybe it's trying to do something. Let's watch it. And Mosaic, same thing. Kind of has this bottom feel. Mosaic reports next week. I think Bungie already reported. Bungie. BONGE, BG is the ticker. It was dropping right into earnings too. So okay. So it's been going sideways. Yeah, a lot of these stocks kind of got that initial pump from COVID, but then it really got accelerated into the Ukraine stuff. But since then, it hasn't gone anywhere. So I've been looking to see if I can get back in, because you see, like once that Ukraine stuff and then the interest rates start going higher, it's not doing well, because Ukraine produces a lot of potash, and that's into a lot of fertilizers. So yeah, I don't know, might be something there. Okay, let's go through the semiconductors. LSCC. Still in the bottom. NXPI. Yeah, kind of making a bottom here, making a range. It looks like a top, actually. Yeah, this doesn't look very good at all, honestly. Oh, I don't like that at all. Cirrus Logic. CRUS. Ooh. Nasty earnings. So we got LSCC, NXPI, CRUS. And we got another one here, NVTS. So this is not very encouraging for semiconductors. For Qualcomm, which is going to report on Wednesday. So tomorrow I'm going to be looking at Qualcomm and ARM. And if you see stuff like this, oh, this is not good. This is not good at all. So today we have Coupang reporting. I believe it's Korean, right? Pretty popular stock. It's down 8.78% right now. Oh, not good. Okay, A-Lab up 37%. I have no idea what it really did to warrant this, but this is the only semiconductor stock that really did well to this week. I mean, this sort of mirrors AHR. So AHR, AEHR. We had a good earnings. We were up like 20%. We tried to make a new top here, but failed to hold it. Pulled back with the rest of the semiconductors. So yeah, there's these smaller companies semiconductor company. So this one, man, this one's not small at all. What the heck? It's already at 15 billion capitalization. Ooh, 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 man. Oh yeah, all right. I don't know. I don't know what to say about that. I mean, Aher is just only 358. That's really wow. Oh man, I didn't know A Lab got that big. Crap. So Arista Labs. Okay, yeah, keep that in your watch list. I mean, we're already at the top here. I don't know. It's just IPO'd and it's already this big. Yeah, all right. We already went over Yum C and Casey. All right. So Kingsoft Cloud and Yum C. We already did fast food in China. Already looked at that. The other one is Coherent. So this was the optical maker. Okay. Optical interconnectivity for the data center and AI. So Stanley Druckenmiller owns this, COHR. So they'll report on Wednesday after the close, I believe. Yeah, Wednesday after close, according to TradingView anyway. CELH energy drinks. Let's see if energy drinks is going to make it. Mineral drinks, healthy drinks, right? So it had quite a steep fall from $100 down to $30. This damage is severe. But hey, it's kind of like in the area where it's been fighting a lot. If it drops through after earnings, then I will watch for something more at $14 a share. Never know. It might go down that low, but you know, maybe the growth story is over for CELH. Like this was a good stock at one point. It was beautiful. Getting it here around, getting it below $10. That's nice. That's beautiful. So let's see what else we got. Nove. I think that's wrong. I didn't put in Nove. Probably that was incorrect. That's not the right stock. Exact Science. Yeah, reported earnings down 30%. I'll see how it goes tomorrow. If there's a lot of ETFs with DNA stocks, so that's like, I think one of them is called iDNA or something. iDNA. Yeah, like this one, iDNA. I think Kathy Wood has one. So ARC Genomic. ARCG. There you go. ARKG. iDNA. You can watch these, but it's going to take a hit tomorrow. And I think we already went over Devon Energy. Yeah. So we're going to watch that too. Alrighty, guys. Yeah, there's a lot of stuff to watch. I don't know. My favorites now are Zim, HIMS, HIMS. Yeah, it looks kind of like it wants to go. Maybe. We'll have to look at a couple of healthcare SPACs, Oscar, OSCR, CLOV. Okay, they might do something. We got SMCI. It looks like it's going to be down 15%, maybe at the open. I don't know. So I'll keep a watch. So if you bought close to $25, which is where I was targeting, yeah, that's the place to bottom fish. You're gonna bottom fish. We're gonna look for that trash. Go for it. But like I said, don't put a lot of money into it, because this stock could easily get cut in half. But hey, like I said, this was the this was actually the whole Wyckoff picture. Man, I lost that Wyckoff picture. God dang it. I gotta go get it again and put it back in there. All right, guys. About 2 hours. Got it. Yeah, we're not having discussion right now. False. So what's up? What's up? Yeah, we're not having discussions on this stream. We're gonna do a separate stream. So here I'm just going through over like all the little tickers really quickly. Yeah, we're gonna have the election stuff. So man, why you keep asking me for money, man? You can make your own money, bro, with all the tips I'm giving you. Like you just need the concepts. Yeah, maybe when I do like some question answer streams or some I don't know. We'll see. We'll see if I feel like it. Did Palantir explode? I made bank today. No, because I don't got time to talk about anything. I don't do these like what do you want to talk about? I already talked about Palantir. Go to the beginning. I talked about it a lot. I'm done. I got my money. I mean, I'm done. What's there to talk about before elections? We gotta wait for elections. I need it real quick. Man, what fucking shit. There's no such thing as making rich quick, man. Holy fuck. Well, maybe there is. Maybe there is, but I'm not gonna say anything. Because yeah, I don't know what you want to talk about. Yeah, okay, get on here then. What do you want to talk about? I'm fucking busy. We got elections. Better go get up here quick. Man, this is like charity or something. Like, what the heck you guys want? What you guys want from me? Copang. I don't know. Copang. This does look like a good chart. Maybe I should look into this more. CPNG, South Korean. Bro, yeah. Oh my god, you need to get a business, man. 150 is a lot of fucking money just to ask someone, right? You'd be like, oh yeah, we're just throwing out 150 for no reason. Come on. I don't know.
Hello. Yeah, my question was, why did Palantir like explode? I made bank up this morning.
It's earnings, man. I've been talking about it the whole weeks. Oh my god, that's what we've been all waiting for. Earnings. You don't keep track of earnings, bro.
Nope. Hire people to do it.
All right. Well, then that's it.
Yes, I just wanted to understand.
I mean, why did they tell you
crazy.
that? Why did it? What if you hired people to do? Why did you ask?
I didn't care about
why
the
you
money,
asking
dude.
me? You don't pay me anything. What the fuck?
Well, you're the smarter of the two of the in the stock market, though.
Well, who's the other one? What the fuck?
Oh, that's the person I hire for it. I don't ask them why.
Oh my! Oh, you hire someone, but they don't tell you
financial
what's going
advisor.
on. So you don't even you pay them, but you don't even bother asking them. All right, fine.
Oh no, but it makes money though. So is it bad though? I get money from it. So I think
No,
that's a
I
good.
mean, like if you don't want to know what's going on, then why even keep tracking of it? Like if you're telling me like the only reason like you're keeping track of it is because you think that guy's not doing as good as he should have.
No.
Is
I
that
want
the
to
reason?
understand. Like he put it in there and it exploded today. So I'm wondering from like your point of view, where he doesn't have the time to talk to me and explain it to me. You do. So like why? Like I wanted to understand why it went so much up.
No, I mean, I'm not going to go into financial stuff because the market will just evaluate however evaluate. But I mean, from my point of view, if you just look at a chart, this is where I bought it. I bought Palantir around 7 to 8. That's why I told people to buy it.
Oh wow, you bought it better than me. Wow. I still
Well,
make
because you
bank
just look
today,
at
though.
charts. Because so I'm confused. Like, yeah, because if you're asking me, it's like I don't pay attention to like why something moves. I'm trying to get into it where it will move later, and to me, I would have sold it before the earnings because it already hit a lot of the but HB. So Palantir was one of the stocks that I've been bragging about like a lot. Well, not bragging, but I mean the only one I've been recommending.
You're the reason I told the person to look into it. But he says I already had it on like the next to buy on me though. He said he already had it in the thing. So
yeah. So when
if you basically like I think you know what you're talking about because if he suggested it, like pay him for that, and you do, so that's why I came here. So like you know what you're talking about. So I don't trust. You know what I'm saying? So.
Yeah, so he bought it right here when like the yen was exploding and the whole stock market was crashing. So he took a chance.
Woke up today.
Like
okay, so you took okay. Well, I woke up today with a lot of money.
He bought it here, yeah. So when I was like looking at that, I was telling him like, bro, maybe you should sell it before earnings because I would never hold it through earnings if I bought it this late. You see what I'm saying? Like, even you think the company is good, it's like if it's not good enough, the market wouldn't reward it. They would just punish it. So a lot of times it's just expectations. If people's expectations are already high and you bought it here, it's sort of, to me, it's like if you bought it down here, obviously you're like, nah, I don't care. But if you bought it like shit, fuck, you already got 100%. Like, get out of there, right? That is so that's just me. That's just me. I don't know. When people play with companies, they gotta deal with earnings. That's the problem. Yeah. So
that's what I was asking you about.
Like, every quarter, you'll see it. You'll see it every quarter. You'll see something happen every quarter. You'll see.
Oh, before we dip out of here, who do you think is going to win the election?
Well, it's still Trump from the betting markets and how most of the markets are behaving, but
yeah,
I wouldn't be surprised if she just won. That's it.
Yeah, she's absolutely going to.
You think so?
Mine's. Dude.
Ooh,
so like, remember
that'll be interesting.
So, I don't want her to win. Don't get me wrong, but I absolutely think she's going to win. And you just
that'll be very interesting for the markets because the market is positioned for a Trump win. So when she wins, so when she wins, you'll see the bonds push back up, and you'll probably see a lot of stocks might dip at the beginning, but then fly up later because they'll catch up.
Well, I have a background in like everything we've talked about before, like the other streams. So like this is just part of the theory that I have, and if it could go to Trump, but there would have to be. It's a very slim chance. It's like 80-20, and so Kamala is like 100%. I agree too. So
yeah, it's crazy. It's gonna be crazy. Fuck.
Yeah. Fuck. Are you guys gonna do a stream here to watch it and stuff like that, or not?
Yeah, it's on the other. This should be a stream going parallel to mine's right now. Yeah.
All right. Yeah. So have the will you be there? I'll come up there every once in a while.
Yeah. I'll come up there later tonight. Yeah.
All right, man. Thanks for your time, buddy.
All right, Falls. Good luck. Yeah, and check back on here, and I'll try to do more of these like charting streams where I go over through every chart, and we'll see. Try to do it real quick. I won't do any lessons right now, and I'll separate them. Okay, so we'll start doing, and maybe we'll just do where I do the scans and really quickly go over like stock, real quick in a short form. Maybe go into shorts or something. If I could do that, if I could get them into shorts, that'll be pretty good, right? We get some stock recommendations into shorts. That'll be nice. Get that ADHD crowd going. All right, guys. Let's go over to the other stream that's running right now in parallel. Yeah, I got enough sleep for the thing. I got to do other stuff right now. I got to go get some food and things. Get ready for this stuff. It's the Pacific time for me, so I gotta get ready. It's gonna be hell. So that's a stream going on over there. All right, you see the link. You can go over there. It's streaming right now. I'll see you guys.